Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, May the 16th. The year is 2022. Let's talk trading. Risk, Part 9 with Walmal. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal. Um, we had a trader inquire about taking little wins but having a bigger loss, and how you've got to make up all those pips if you have a loss.
Right. Well, he's absolutely right. If you get a big loss, there are a lot of pips that have to be made up, and that means lots and lots of trades to do that. But my first question is, why do you take the big loss in the first place? Just because your your risk appetite says you can lose 10 pips doesn't mean you should take 10 pips as a loss. I mean, that's just a reality of the situation. If you go into the trade for a reason, and for whatever reason it happens to be, I don't care what your method is. Now you can be trading fundamentals as far as I'm concerned. But for whatever reason, you get into the trade and it's clear that, hey, this is not doing what I expected the trade to do. Why are you still there? It's the type of thing where I know you like to go and say all the time that you may have a method that goes and puts you into a trade, but the method's off the table once you're in the trade. Maybe I'm paraphrasing that wrong, but I'm trying to, get the gist of what you're saying with that. And it's simply that it's a different animal that you're trying to tame once you're inside the trade. It doesn't matter why you're in the trade. The reality is now you're in the trade. So what are you going to do to go and try to make that trade as profitable as possible / minimizing your risk? Now, I'll use today as an example. Today I took a Walmal trade, 2 hours ago at the 60 line, and I went short, and it was really nice. And I went on that trade. I was in it for probably about 15, 20 minutes, which for me is a very long period of time. But I was in that trade for a good period of time, and because I had moved about 15 pips, because I probably haven't said this or disclosed this to a lot of the traders out there, but I've increased the amount that first of all I'm trying to go and get as a daily goal in terms of dollars, but also in terms of pips as well. But more importantly, be doing that, or what I've also done is I've also raised the amount of lots that I'm taking. So by taking 15 pips on that trade, I was able to go and actually make twice my goal for the day. That's not bad. That was a good trade. I mean, it worked out really well. Have the trades recently with Walmal's been that nice? I'm going to be honest with you, they haven't. But the thing is, the way this thing was moving, it was moving smoothly. The spreads were small. It wasn't moving, in any erratic fashion in any way, shape, or form. So hey, let's go and ride it out and see where it takes me. And so I got to 15 pips, and I said, okay, at this point in time, I believe at that point the range for the hour was pretty close to 40 pips or something crazy like that. In fact, let me just tell you what the range was at that point in time when I got out. It was, I'm sorry, not 40 pips, 25 pips. And I started thinking, you know what? That's probably time to go. Why go and ride this horse any longer? Let's get off, take the pips I have. Okay, that said, I now got what I have in the bank, and no fault of my own, just the way the market was moving, I went, and this is going to get us back into risk TRO, and that is that I took a couple of trades after that. They didn't work out for me. If you look at the last hour, look at all that chop that was down there, and I just got chopped up a bit, and so I went from having twice my goal to, I think when we first got on the phone, I said to you, I'm done for the day because I'm back down to what my goal is for the day. So I'm not going to risk anymore. I'm done for the day. I've made what I need to make for the day. I'm happy. Why go and risk it? Now there have been days where I've broken that rule, but that's my rule, and that's what I do to go and try to prevent getting myself into trouble. And I hope I answered that trader's question, but I'll just summarize it with just this. Why are you going to go and ride a loss to 10 pips? That's, even with the original, plan, with the method that was out there, we would never ever go and risk that many, that many pips. That's your outside risk. That what I call an outside risk. That's how much you're willing to lose, but that doesn't mean that you got to go lose that. Trade's going against you. Why are you still taking the trade? Why are you still in the trade? Just get out. Get out with a smaller loss, and that way you can go and continue fighting for the rest of the day.
Yeah, I think that's one of the things that I guess it's hard for traders to do is cut that loss as opposed to let it hit the stop loss, because once again it's a psychological thing, because what'll happen is, let's say you get in it, let's say we go in a trade right here. Now if this thing starts to go down 5 pips, maybe you jump out, but then you'll sit there and you'll watch it turn right back around after taking your stop out and then continue up, and it goes to where your TP was. So that messes with your brain, because the next time that happens, you don't stop, you don't get out at 5 and it runs all the way down and it hits your stop at 10. And you're like, then that's when you go into tilt mode. You probably start revenge trading and who knows what else.
Yeah, and it just puts you into a total whatever, and next thing you know, you can turn, you can very easily turn a bad day into a horrible day, or you can turn a very good day into a bad day just by doing that. And you just got to be careful, and just, you don't just because I know I'm repeating myself, but I think it's worth repeating. Just because your trading plan says you can lose 10 pips doesn't mean you should lose 10 pips. I mean, that's more of, I put a stop loss on all my trades at 10 pips, and it's there for one reason alone, and that is, what if the market goes and does something stupid on me? In fact, we had that situation last week where the market went against me pretty hard at one point in time, and thank goodness I had that stop loss in there. And and what happened was, I think I had a 10 pip stop loss, and it still took 15 pips or more from me in that one trade. Thank goodness I had that stop loss in there. That's why it's there. It's sort of like, I don't know how many folks have ridden trains, commuter trains in particular. You get on a commuter train and there's that big red box up on the ends, on each end of the car, and it says emergency brake. And that's what the stop loss is there for. It's an emergency brake to go and bring the train to a stop so you don't crash into a wall. Well, that's how I look at stop losses.
Right. But the funny thing is that taking a loss is something that just really can mess with your your brain management, your psychology. And that's really what the hardest part of this game is, because like I said, once you put the trade on, the reason for entry just goes off to the side, doesn't matter anymore. And I think what happens is if you want the price to go up and it's going down, you start to get into the cheerleading or the hoping or the whatever, as opposed to saying, you know what, I'm looking at this chart, price is going down, there's no signs that it's going to go up. It could go up, but I don't see any signs. So it's like, maybe I just need to scratch this trade, get out of this trade, and as you would say, live to fight another for the next trade, as opposed to taking that 10 pip stop.
Yeah, if you look at the 5-minute chart from last hour, look how many times it tried to go and break that 50 line. And what I had done, what got me in trouble, was that I would take in the Walmal trade for the break of the 50. It was a good trade. There was nothing wrong with the trade. I had enough range left in the hour. If you had looked at the 30-minute chart, it looked good in that respect. The 1 hour chart looked good. Everything I did absolutely nothing wrong. But what did it do? I actually got up like 1 or 2 pips. If I would have done my smash and grab type of thing, I would have gotten out 1 or 2 pips. But then it was like, no, I think this is gonna go down to 40 or whatever. Well, guess what? It didn't. It didn't. And it just took me out, and I did not lose 10 pips on that trade. I promise you, I got out before the 10 pips. Now, I probably wish I'd gotten out a little bit earlier than that, but I didn't lose 10 pips, and I lost half of what I had made in that to trade on the previous hour.
Yeah. Hey,
That's just,
I got a quick question for you. Did you realize the previous day's high was at 22.48?
yes, I did.
Okay.
And I had hoped that what it was going to do is, again, hope it's not a trading plan, right? but my hope there was, okay, we're coming across a Walmal line. It's at 50, so that's a psychological line to boot, and it was going across that daily line as well. And so like, hey, if this thing breaks, it's going to break big, and well, guess what? It didn't. You can have all the reasons in the world why that's a good trade to take, but it still doesn't necessarily mean it's going to, go in your direction. And, it can very easily just turn on you and just not work out, not pan out. And, like I said, I lost a chunk of change there.
Yeah.
But at the same time, I'm up for the day, so who cares?
Okay, but if we wanted to play not necessarily Harry hindsight, but just to look at the chart, if you go back, I don't know if you've got where, if you look and see where it hit that high somewhere around 22.70, but then if you come back down to the 50 line, you can see it closed below 50 one time. And then you start looking, you start moving to the right, then it closed below 52 times. Then you come to about, I guess when you were trading, it hadn't closed below 50. And so it's kind of like, well, it's not really, seems like it gets between 40 and 50, and we know what 40 is. It's the launch pad. And
just getting rejected.
and it launched again from the 47, 48 level, up to almost 60, and then the next time it, hit 66. So
yeah. I mean, and that's the thing too. So you can look at the chart, Harry hindsight and everything else. I had reasons why I took the trade, and I'll guarantee you, there were people on the other side of the fence had reasons why they took the trade in the other direction. They made money. I didn't. It's a zero-sum game, and that's just the way it is. And sometimes, the reasons that you had, this time went and outweighed the reasons that I had. Next time it may be flipped the other way, and I don't know which way it's going to be. So what trading comes down to is controlling that emotion. So when you're in something like that and it doesn't work out the way you want it to work out, you're able to go and say, cut it off so you don't go and lose too much money, or if you happen to be on the winning side, like I was the first trade I had today, go and take the money off the table once it looks like that's about as far as it's going to run. So that's part of it. And I'm going to be honest with everybody out there. Part of this is there's an art to this as well, to a certain extent. Now I know that they say that robots and whatever else can go and outperform the human. In the long run, and I think that's absolutely true. And I think part of that's because the robots can take every trade and not miss any trades and maximize that. But I think that sometimes we as humans sometimes can go, and if we're in tune with what the market's doing, and we've learned to do it, I think we can go on an individual trade, maybe get a little bit more than a robot can get. But in the long run, the robot gets more because he takes all the trades.
right, and the robot doesn't fatigue.
Exactly.
And the
exactly
robot
right.
doesn't get emotional.
That's
There's,
exactly right.
yeah. So, and the thing is, and the robot's not going to change the rules mid trade. But then again, I should probably put an asterisk on that statement, because with AI, it's always self adjusting. And it's funny because the fastest 15 minutes in trading's just about up. So maybe we can talk a little bit more about that on the next video. So, fellow traders, just remember that trading is risky, and it's easy to lose a lot. So you just have to make sure you don't do that, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.